Hello, everybody. Yesterday saw another 597 points to the downside for the Dow, another 200 plus to the downside for the NASDAQ, and this in the face of what some people thought was a bullish rebound just 2 days ago. What does it all mean? That's what's coming up in this market update for March 2nd, 2022. Let's go. Hello, everybody. It's Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic as we are getting ready to launch another trading session here for March 2nd, 2022. Depending on when you're watching this, I'm actually doing this a few hours before in the middle of the night. But we've kind of got a pretty good assessment of where things are, so I think we'll have a pretty good idea of where we're going to be going tomorrow. So there's a few things I want to talk about. If you saw my update last week, then you know, big picture, I've been very bearish. I went through a big, grandiose overview of what we were expecting. Did about a 45-minute video on that last week. This one will not be as long, I don't think. Now, I'm not going to go through the weekly stuff, and we're not going to look at the big picture. We're just going to update where we are, just kind of pull things back together so you guys have an idea what's going on. I've had a lot of people that are emailing, some people reaching out on Telegram and other social outlets. They're asking me, they're like, hey, on Friday we had this huge bullish day, and a couple days before you were saying we're bear. What's going on, Jeremy? Were you wrong? Of course I wasn't wrong. I thought I was wrong once, but turns out I wasn't. All right, let's go take a look at it real fast, and we'll see what's going on. We're looking right now at the Dow Jones Industrial Average, and you can see that today/yesterday, depending on when you're watching this, we had yet another big bearish candle. And that was reflected as 600 points, 597 points to the downside. That's what Tuesday's trading session looked like. That in and of itself is not such a big deal. What I do want to say about the downside movement, I've been talking about this. I spent a lot of time Sunday night in my Profit Picks class talking about this, that the big theme for this week and really for this season of the market trends is volatility. Lots of higher highs. Oh, I'm sorry about it. Rewind. That is not what I meant. Lots of big moves to the upside, not higher highs, but big moves to the upside, followed by lots of big moves to the downside. That's what we saw Thursday and Friday last week, and that's what you're seeing continuing as of Tuesday here. Still making lower lows and lower highs. Big trends, still bearish, but the intraday movements, lots of volatility, lots of really big days. And I've been forecasting we're going to have 2,000 plus point days coming up in the future. I spent a lot of time Sunday night in our profit picks going back to 2008 and showing how that would be how that would parallel for this. So you can go back and watch that if you want to. But let's come in here and take a look at the movement here. Just kind of going back about a week or so, we're obviously in this bearish move now. We're well below these moving averages. We actually sold off straight to our support level on whatever day that was last week, Thursday, and we bounced. So we gapped down, sold off straight to support. We bounced. And then look where we bounced to. Big day on Friday. Everybody's like, oh, the bulls are back. The bulls are back. Headlines were all messed up. What were the headlines saying? They were saying stuff like, the bulls are back despite the bad news in Russia. Because, folks, why is that? Because the market doesn't care about the news. No, despite what the news tells you, the market knows that the news doesn't matter. The market is not moved by the news. The news is moved by the market. So what the news does is they always go tie a headline to whatever's happening in the marketplace. Never forget that. All right, coming back over here. So Friday was a big bullish day. And then Monday we had this little candle here that we call a doji candle. You could also call it a star, but this little doji candle, this little tiny candle, basically the same close as we had open. And then on Tuesday, look at that big bearish candle, okay? Now you look at that in context, and the most important thing, I'm going to zoom in just in case you're watching this on a small screen, because I know a lot of you watch this on small screens. This in context is a specific candlestick formation. Those three candles is what we call an evening star. You ready for this one? Reversal. That's it. Evening star reversal. The evening star reversal is a bearish reversal. It looks just like this. Big bullish day on day one. The middle day is a small star candle is what we call it. But, in a perfect, ideal evening star, you'd have a gap up. But this one doesn't have one. That's all right. It doesn't have to have one. And then the follow through to the big candle to the downside. Not every time, but more often than not, statistically, this trade is going to fizzle its way back down to our support. Now, in this particular case, I want to give you guys kind of some stuff to expect, and I'll lay out my forecast for you in a minute, but we're not in the biggest wave of this yet, I don't think. I think we've got a little bit of time. I think we're going to establish this support. In fact, this is my forecast. I think we're going to establish this support. That's my number one forecast for the week. Okay, the second way that I forecast this could go for the week, I'll do this in a different color. Second way I could see this thing going is maybe just kind of hanging out here and then eventually selling off. Okay. My third forecast for the week, in case you missed it Sunday night, was to just sell off. I think that's the least likely. I think the least likely is that it's just going to sell off straight down. Most likely, I think we're going to come back in here to this support level. We're going to establish that. And then following the establishment of that support even more, what I'm anticipating will happen, something to this effect, is we will establish our support. We will rally to around 34,000 before we come back, test that support more, and eventually sell off. So that's what I think is going to happen. That's what I'm prepared for. That's not a rally that you want to trade. Let me be clear. That is not a rally you want to trade. Those are the people that are riding the slope of hope all the way down, people that are buying right now. So we've already seen the selling coming back in. This happened across the board. Now I've kind of laid out my forecast. I kind of jumped into that a little earlier than I meant to, but that's all right. Here's the S&P 500. Same thing. Little evening star reversal at your 10-period moving average. Same thing over here with your NASDAQ. So a little different candle formation, but still very bearish there. I want to address something, though, at the bottom of this screen. If you see it, I'm back on the NASDAQ, or excuse me, I'm back on the Dow now. You may notice down here at the bottom, my stochastics, they look like they're happy. They look like they're going up. And a lot of people right now would look at that and they would say, uh-oh, stochastics are bullish. This thing needs to go up. No. Here's what you got to understand. Your stochastics are a fantastic tool in a channel. When this trade's going sideways like this thing was for all these weeks and months here, your stochastics is going to be just an impeccable tool for timing your entries and your exits for a channeling trade. You see that? Look how perfect that is. So then what happens is people get down here and they're like, oh, we're oversold and we got to go back up. No. We just broke the pattern, folks. We broke the pattern. So when you break the pattern, and I'm going to highlight this maybe like blue here. We broke through support. This is what last week's video was all about. I told you last week that, hey, this thing's happening. Once you break through all that, the pattern is broken. This channel is broken. And what you're going to find with this oscillator, with this stochastics in particular, what you're going to find is if this trend gets, depending on how it gets going, let's say it just tumbles in that way. What you're going to see with your stochastics is it's going to get down here and it's going to stay oversold for an extended period of time. And that is okay. That is exactly what you would expect to see in a bear trend. So the reason I'm going into this detail is I don't want you to be one of those people that gets head faked by it and you have this idea that, oh, well, the stochastics is oversold and it's turned up, so we must be going up. No. Recognize the trend first. When we think about the priorities of what we're recognizing, the first thing to recognize is the trend. And in this case, it's very clear, according to the moving averages, that the trend is bearish. Okay, so the trend's bearish. We've dropped below support. We've established a new support. We've bounced up. We've tested it now. We tested it between Friday and Monday. Tuesday, we start to roll over a little bit. That's the wrong time to be buying. Now, inevitably, somebody's going to come back and say, well, this is where it did it before, and I bought, and it worked. Okay, great. You got rewarded for doing something bad. But if you want to look at high probabilities, this is not the time to be buying. This is maybe the time to be shorting, maybe the time to be selling some credit spreads, or some bear call credit spreads, or other option strategies that would bring money in during the bear market. But you definitely, way too many uncertainties for us to be buying right now. So not a good time to be buying, in my opinion. This is all in my opinion. No specific financial advice here. This is not a great time, in my opinion, to be buying. What I think, I've already laid out what I think is going to happen here. So I've addressed the issue of the stochastics. Let's address, before I wrap this thing up, and then I'll also look at some crypto real fast too before I call it a day. Let's address the issue of volatility as it looks on the trend here. So what happens a lot of times, let me scoot this over and I'll just draw this out for you. What happens a lot of times is people have this delusional idea that the market does this. And then when it's done, it does this. That is delusional. That is not how the market plays. The way the market works is the market moves down to a level. It may come back up. It will move back down to a level. It will notch its way down. It will give us some little continuation patterns. It does something like that. Okay? Those little counter moves, those little moves and counter moves, that's what head fakes everybody. What we just saw on Thursday and Friday of last week is a counter move. Don't be head faked. Understand what you're looking at. Okay, this trend at this point, we're starting to clearly establish our 3-point reversal. We're clearly establishing some resistance. We got some support on a trend line here. You could go so far as to say we've got a downward channel that's building. Downward channels rarely get back up to the upper side. Sometimes they do, but the chances of getting back up here, very, very low in my opinion. Could happen. More likely what's going to happen is we're going to trade right down here like I suggested. Go sideways for a little bit, maybe bounce back up to around 34,000. That looks like that would kind of correspond a lot with that upper channel line and then maybe drop down. Look for something like that, folks. Don't be in a panic. There will be a panic sell at some point for the market. I don't know that we're there yet. I don't know that Russia is going to be the trigger for it. It might be, but it's not looking like it. It's not looking like it at all right now. What I think you're going to see is exactly what I just laid out for us, and that's what you should be prepared for. So definitely still very bearish in my perspective. Let's look at Bitcoin really fast here, Bitcoin and Ether, because these are some cryptos that some people are getting very excited about. I had some messages from some people that were saying they were buying Bitcoin because it was up 4,000 points yesterday. Jeremy, I think it's time to buy. Okay, cool. Well, my entry for this is not there. My entry is way up here in the $46,000 range because I like to get outside of the consolidation. What I'm worried about with Bitcoin is I'm worried about this resistance that we've got here around 46.2, and I think we're going to hang out there. In fact, we're already starting to see some resistance coming back in there. So if you're one of those people that jumped in because it was a 4,000 point gain on whatever day that was, Sunday, be prepared that this may be rolling over right here, and we very well could just get stuck right here in this trading range right here, okay? I personally would still like to see, it doesn't have to happen, but I would like to see Bitcoin go on down to the 30,000 range and then make the turn. That would really complete a lot of really nice symmetry to the market. It doesn't have to happen, but that's what I'd like to see. And I would be looking at taking some short trades of some sort around 39,000. So I'm really not going to be bullish on Bitcoin until, number one, we're above the averages. Number two, I get above my resistance, which is right here. And number three, I have a close up there. And I would also like to see, it will be happening by that time. If all those other criteria are met, the next one will be met, which is I want to see my 10 period over the 50 period moving average. But these are kind of the signals I'm looking for in Bitcoin before I would be buying Bitcoin right now. So that's just a little, that's my opinion. I'm not telling you what to do, just my opinion there. My opinion on Ethereum, is kind of the same thing. We got some resistance coming in here around 3,200. You can see my bearish trade set up. I don't even have a bullish trade set up on Ether. 3,200 is where the big resistance is coming in here. So watch for this to maybe rally up to there and then kind of fizzle its way over. But I'm looking at doing a bearish trade on Ether if and when it drops below and closes below 24.99. So just 2,500 basically. And if that happens, my next targets are way down here. My next targets for Ether are like 1,800. Yeah, about 1,800 bucks. So that's what I'd like to see happen for Ethereum. Yeah, and if you're not used to this, if you've never seen me do trade setups where I actually set higher entries or lower bearish entries, and that's against your philosophy, that's fine. I learned this in Forex trading from a seasoned Forex pro who taught it to me, and then I applied it to options, and I just found that when we do this, when we do trade setups like this, and we go ahead and enter on upticks after a breakout, what it does is it makes the probability of those trades substantially higher. So that's beyond the discussion we're going to have here, but it kind of gives you an idea of why I'm thinking that way. So there you go, folks. There's a little market update for you. I hope you've enjoyed this. Hope it's been helpful for you. I'm going to try to do these probably every Wednesday morning. So, that kind of gives you a little bit of a midweek update to look forward to. If you want the Sunday night updates moving into Monday, you can join me for profit picks, because that's what we do every Sunday night when we get together and we look at all of the indices and all the different trade setups, and we pull out some trades that could maybe be some good ideas for the week, and we talk about all that stuff for about an hour and a half. And that's a great experience. You can join me there. It's included with your memberships over at Trade Maestro. So if you've got a membership and you haven't been showing up for profit picks, then you've been missing out. If you don't have a membership and you haven't been showing up for profit picks, you've really been missing out. So go head over to trademaestro.com and you can get yourself signed up for that. All right, folks, listen, if you are not subscribed to my YouTube channel, get yourself subscribed. If you're watching this on the blog and you're not on my email, go get yourself on my email list so you can get notifications about this stuff. If you're on one of the social outlets on Facebook or somewhere else and you're not subscribed, then obviously, come on, what are you thinking? You need to get yourself subscribed so you don't miss any of these, because like I said, every Wednesday you're getting a market update, but between Wednesday and Wednesday you get other stuff, really cool stuff. Like, have you heard about the death cross? There's a death cross that's been showing up in the market lately, and it's kind of like all a buzz. I'm about to do a video on that. You're going to want to see that one. And what about like cycles of why the market's doing what it's doing right now? Would you like to know about that? Also coming up in a video. So get yourself subscribed so you see all that stuff. And until next time, happy trading to all of you. We'll talk to you soon.